What's up, brothers and brotherettes? We're back at it again with another market breakdown, and in this one, I'm going to keep it short, but we're going to talk about two very important things. Number one, the bull case, what the target would be, and the early signs that maybe we are recovering. And number two, the bear case, what the continuation downside target would be, and once again, the signs that we know we might be selling off. I want to give you the bull case, and I want to give you the bear case, so you're better prepared for the remainder of the week. I hope that sounds good to you. Before we get into it, if you enjoy these type of market breakdowns, don't forget to like, don't forget to subscribe, don't forget to hug your mom, and with that being said, let's ride. By the time the world's largest casino went dingity ding 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 on the day, once again the bears were victorious. S&P 500 slides for a fourth day after consumer confidence data disappoints, and the Nasdaq dropped in excess of 1%. And from the get-go, when we woke up and we were getting ready for the day, getting a cup of coffee, we knew it was going to be bad because it started off with this. Bitcoin drops to a 3-month low below 90,000 in a risk-off move. And as you're about to see, I think there's more of a downside. And then after the market opened, 30 minutes into the day, we got the consumer confidence report, and it did not get much better. February consumer confidence posts biggest drop since 2021 in latest sign of slowing economy. We're breaking records, but not the records you want to be breaking. And it might surprise you, people are losing mucho dinero. Wall Street gamblers get crushed as leverage ETF losses hit 40%. And yet, with all the blood in the water, more traders turn bullish in first quarter, even as market shows signs of fatigue, according to a Schwab survey. And here, I want to quickly pause the video and ask you, at this moment, are you a net buyer? Are you adding to your long-term investment account? Are you liking these reduced levels? Or are you being a little bit more patient? Do you think that there's more downside to be had? And once again, I'm not talking about the short-term scalps or even short-term swings. I'm talking about your investment account, the things that you plan on holding for years. Are you buying right here, or do you think there's a bit more pain to be had? And while you're noodling on that question, let's actually talk about what happened today. Early in the morning when we woke up, the market was all right, pretty much at the closing value from yesterday, and we quickly vomited for the first roughly hour on the SPY, the Qs, coin getting crushed with crypto. And speaking of that, as I'm filming right now, Bitcoin is in the realm of 88,000, which once again, as that article referred to, is a risk-off situation. But by the time the bell actually closed, the SPY down 0.5%, the Nasdaq down 1.3%, Bitcoin's down 3.7%, and you can see some of our favorite tech stocks are getting absolutely slaughtered. But what's interesting about it is we're currently getting mixed messages from the options market. And what I mean by that is you could see price vomited early morning, and then the delta rose all day. Now, if you've watched any of these breakdowns, you might be thinking, great, are we going up for calls, puts, or because of both? And look how strange this is. Right around 11:30, longer dated calls were getting bought like no other, and then that faucet turned off right after 1 p.m. But then yet at 2:30, puts were getting closed out. So that's interesting in itself, not really moving in concert together. But then if you look at the 7 most impactful stocks, I'm talking about the Mag 7, Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, they weren't really doing anything. They vomited all the way till 11:30, had a little bit of bullishness, and then just kind of faded into close. Not much going on there. And just because I'm seeing the Mag 7 still way weaker than the overall market, I decided to do a bit more research. And in the bearish case, I need to let you know something. This is very important. On the screen at the moment is the open interest for each individual day for the remainder of this week. And I want to point out the spikes in action. This is the open interest for the SPX. And you can see Tuesday, not so much Thursday, but definitely Friday, there's quite a bit of interest at the 5950s. If that doesn't hold, the next thing stopping it is all the way down to 5,900. So that's the open interest. But then with respect to the volume actually being traded today, yeah, you could see some nodes at 5,950, especially if you look later on this week. But once again, the next evident node is all the way down at 5,900. So, as I alluded to at the start of this video, if we end up breaking 5950 and confidently holding below it, I think we drop another 50 points, which would roughly be an additional $5 in the SPY if you need that conversion level. That would obviously be the bear case, and the only thing you need to know from there is look at the options drop, look at that price break, and then I think that opens up the gate, and this is very much in play for this Friday. On the converse side, the other levels that you might be noticing are 6,000. So you're seeing that in terms of volume and coming back to the open interest. You can see there's quite a bit going on at 6,000. And if we happen to get above that, yeah, we might then be talking about 6,050. But those are clearly the levels of interest from an open interest perspective and also from a volume perspective. So we have the bear case, we have the bull case. With the bear case, you know that that's going to be happening by breaking 59.50 and the options delta vomit. The bull case is a little bit more interesting because that's most likely, if it does play out, going to be happening with what's referred to as a Vana rally, V-A-N-N-A, Vana, which is a second order Greek in the world of options trading. And not to bore you, not to get your eyes to gloss over, I'm not going to be preaching some math here, but what you need to know is as volatility goes up and up and up, generally the market is going down and down and down. When that happens, it's very common to see a lot of buyers getting a ton of puts. Then when we bottom out, all of a sudden those puts buyers, the people who are long puts, they decide to hit the cash register, close their puts out, and sell them back to the market. When this happens, not only does it put in a bottom, the delta is going to rise, but also that is going to contract volatility. You're literally going to see the VIX drop. Now, when this happens, that means that the market makers who sold all the premium, they don't have to hedge as much, so they get rid of some of their shorts. So you have this interesting mixture of puts being closed out, delta rising, vol getting crushed, and market makers not being as short. You add those all together, and that's what pushes the market up, sometimes very aggressively, and that's what's referred to as a Vana rally, which really the major ingredient is a ton of puts being closed out. As I'm showing you, there's a lot of puts currently in the system, so if all of a sudden one person decides to close, which causes another person to close, and then you get a little bit of a cascading effect, yes, I'd be looking for that push up to 6,000 flat, and if we push over that, the Vana rally might get so extreme that we could go up to 6,050. So that's a little bit more of a definition of what's happening potentially in the bull case. Remember, as an active trader, you don't want to be married to the bull side or the bear side. You want to take whatever is being presented to you. You don't want to be predictive, you want to be reactive. Speaking of which, the next logical question is, okay, what's going to prompt the bull case or the bear case to play out? And the answer to that is an answer to the current amount of uncertainty. On the political level and on the monetary policy level, there's a lot of uncertainty. Starting off with politics, we know that tensions are awkwardly high between Ukraine, Russia, us, and the EU, but we do have an update here. Ukraine to agree with US on terms for minerals deal, so that might calm things down a little bit. But once again, on the political level, whether you like it or not, it does have an impact on the global economy and thus our economy. You got to pay attention to it. But more important is the world of monetary policy and really Jerome Powell and the Fed, and really specifically the old tariff war. Trump says tariffs on Canada and Mexico will go forward. We're anticipating getting more information on this at the start of next week, as in the first trading week of March. So please pay attention to it, because this will have a massive impact on, do we have a nice rebound or do we drippity drop? But don't forget, between now and then, there's a whole other host of things that are going to be going down, impacting the economy. And granted, Wednesday's a bit quiet, not that many things scheduled, but on Thursday, we get the GDP report and the durable goods orders before the market opens around 8:30 a.m. And then on Friday, we get the all-important inflation report, the PCE, the personal consumption expenditure report. So those ones are both very big. And let me remind you, the last mega company reporting earnings is going down after the market closes tomorrow, Wednesday. We are going to be hearing from NVIDIA. So for me to set this up, for you guys to know, are we going to keep going with lower highs, lower lows? Yes, we broke the 50 EMA. We're right at support. There is the downside gap fill at 585. If you look at the Q, same thing. We're breaking the lows. We're breaking the support. We're right at a key level. And if things get really bad, once again, a massive downside gap fill. To know if we're going there or if we're just putting in a low and we're going to kind of bounce off of this, it's all going to be dependent on NVIDIA's earnings after the market closes on Wednesday, the GDP report and other things on Thursday morning, and then the PCE report on Friday. So from now to the remainder of the week, if there were to be one quiet trading session of the week, it's going to be Wednesday. And then going into market close, we're going to be getting NVIDIA's earnings. That's going to cause some craziness. Market open on Thursday, we get GDP. market open on Friday, we get the inflation. So yeah, it's going to have some good action tomorrow, but I think the real show is going to get packed into the final 2 trading days of the week. And remember, don't be married to the bull case or the bear case. Just pay attention to what's going on. And in this video, I gave you the breakdown of the early signs of how you know which case we're in. And then of course, from there, pay attention to those actual target levels. If you want to see this stuff play out in real time, do not forget Monday to Friday, 9 to 11, I am live streaming. I'm giving out all this data for free, all the flow for free, all the information for free, and really a little bit of a sprinkle on top. I even show you all of my trades in real time. Feel free to stop by and check it out. I hope to see you there. I do appreciate you stopping by, enjoying this video. If you did enjoy it, don't forget to like, don't forget to subscribe, and even leave a comment if you want to help me out with the old algorithm that runs my life. More engagement really does get this video in front of more people, so I would truly appreciate it. But most importantly, I do appreciate your time. I'll catch you in the next one. I'll catch you in the live stream. I'll catch you in the trading Discord. Thank you so much.